Hello traders, Gary Wagner here. Approximately 9:15 in Honolulu, 3:15 in New York. The metals have closed for the day in New York City and are now trading in the Forex morning session. We had the market slightly higher to unchanged throughout the evening session into this morning, closed a little bit higher actually in New York, and is now trading off. It's trading off by about $4 to $5. As you can see, current print 1666. It has had a high of 1677 and a low of 1664. Silver also coming under pressure as we go into the mid-morning session. That had been higher throughout the day. Actually, when you look at the high 31.38 right up in here, you can see we're well off the highs and currently trading off about 8 to 10 cents lower. Looking at a 60-minute straight candlestick chart, you can see the activity has actually picked up and the markets are under pressure on the mildest of amounts. In terms of support, we do want to see if it holds this most recent low as it came down, and we will go from there. We are looking at a 60-minute straightforward candlestick chart. This, of course, is of spot gold. As you can see, current print 64.70, so it is quite near the lows today. You can see the tops that it hit 1676, 1678, right in that area. We had two sets of tops. Market came down, found support, and then made a top a little bit higher. This is obviously where it stalled right at around 76 and is now under a little bit of pressure. What we can say, and we've got, of course, the meeting by the Fed this week with Bernanke speaking on Friday, I believe, at the conclusion of the Jackson Hole Annual Federal Conference. At the same time, next week on September the 6th, we have the central banks meeting in Europe. So traders are awaiting any kind of news out of these two different platforms to see what in fact happens, if anything, in terms of any kind of quantitative easing. When we take a look at this market, as I said, 60-minute chart, and as you can see, beginning of the month is really here. This is August 1st, and you can see this nice climb, from about 1580 on the lows here, comes in, it makes its first high, but it stalls, of course, in this area being 1615 to 1620. This is the same resistance area that we've seen on a few occasions, and therefore the market could not take that out. It came back down. When it did come back down, though, the interesting thing is that as it moved back up on this last occasion, you can see right here, as it breaks above and we get this dynamic breakout of the market, this is about 1625, you get this tremendous pop right in here. And then from that pop, of course, it consolidates for a little while and then begins to trail higher until it reaches this high. And this high, of course, is on the 23rd and 24th, comes back down. And then recently last week, we've gotten this new high, 1676, and as we said, we're under a little bit of pressure here. But here's what I'm looking at, and this is what I think is important. This is our weekly chart with our current Elliott wave count, and also, more importantly, our compression triangle. The question that remains partially answered, but not completely, is we did have a solid breakout well above these particular parameters, meaning the compression triangle. We also saw a lot of energy released as we saw this market shoot higher. If in fact we have broken out, that really gives us some pretty solid technical information and really some fairly solid evidence that we might have in fact concluded this long correction of wave 4. Of course, we had major 3, which took us to record all-time highs at 1920. And if, in fact, we are going to enter a fifth wave, a major fifth wave, we can look for this wave to take us somewhere between about 2,000 and 2,200. That's based on straightforward Fibonacci extension. Now, the easiest way to do a forward forecast using Elliott wave is to use wave 1 as our benchmark, especially on wave 3. So what I do is I simply create a Fibonacci extension from the beginning of wave 1 to the top of wave 1 right in here. and then I carry this over to the lows or conclusion of wave 4. We can move that forward a little bit. Let me add a couple of items. And as you can see, I've kind of amended that. On an extension, what we are looking at, if wave 1 is going to be equal to wave 5, which is a typical formula that we look at as having some strong potential, that would take this oncoming major fifth wave, and realize this is a long-term projection. Take a look in terms of the time period it took for wave 4 to completely establish itself, or wave 3. It will be at least a 3 to a 6 or 7 month parameter, but we would be looking on the minimum to see this market move to record highs around 2061. 161% takes you to 2372. You can see 2313 and 2253, and then 2180, this being the 123, 138, 150% retracement. Those are the types of, extensions. Those are the types of extensions we can look for, and I believe that we have some very, very strong potential to achieve that. Now realize, within this major fifth, we will have our intermediate count, which is really what we look at day to day. And that intermediate count should, of course, be comprised of a total of 5 waves. 1, 3, and 5 being the impulse, and then corrective waves 2 and 4. So this isn't going to be a market that moves straight up, but it is going to be a market that offers us some great opportunity. There can be no doubt, silver has been the shining star of the precious metals. Platinum's been moving pretty solidly also. But silver today, for example, when gold was up about a third to 0.4% of a gain, silver was showing a 1.5% gain, almost triple that. So I would expect some increased volatility in silver. It could easily be seen when we take a look at the kind of price rise that we've seen. It has virtually moved. You can see this sideways trading activity throughout the beginning of the month. And then really when it took off from about 28, and it has traded as high as 31 and change, 31.20, 31.30 in that area. So it's moved up considerably when you consider the actual moves that we have seen in the market from 28 to 29 to 30 and of course to 31. That's a tremendous rise considering the price of silver. $3 is a tremendous percentage point gain. I would look on all of these markets on any sign of weakness to consider that an opportunity to add to our positions, as I believe that we are now entering a strongly bullish phase within the precious metals markets. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.